Welcome to Barchart's series of webinars designed to educate you about a variety of market concepts and inform you of the features and tools Barchart provides related to those concepts. And finally, to offer you some trader's insight to help you make a more informed investment decision. Today's subject, did the market bottom in June, and a debate among two traders. Today's session is going to be a little bit different from what we normally have. This is going to be a really unique opportunity. We're going to have a special guest on today. Our special guest is going to be Jim Van Meerten. We'll get to him in a moment. But from a personal level, I just feel that there's a tenet of life that I live by, and that is that it's always important that we push our education forward. We always need to be learning. And when I introduce Jim, you're going to find out Jim has been in the business for 50 years, and I've been in the business for 40 years. And I can still learn something from Jim. So it's a real honor and a pleasure to have Jim on today. So I'm looking really forward to this, and I think most folks are really going to enjoy today's session. Now, always with me is my partner and our moderator, Barchart's project director, Gene Baker. Hello, Gene.
Good afternoon, gentlemen. How are you both today? Hope everything is going well.
Well, so far, so good. But besides that, Gene, I think you're excited as well to have Jim today as well, wouldn't you say?
Oh, absolutely. So I know you've been planning this session for a long, long time, and there's a lot of really exciting information we're going to hear from you both today, and I know our viewers are excited to hear it as well.
All right, so let's get started. Ready to get started, Gene?
Yeah, let's get going.
Let's get going. All right. So let's do this. Just remind everybody today's session is for educational purposes only, and that decisions to buy, sell, hold, or trade securities or commodities or any other investment involves risk and investment made based on the advice of a qualified financial professional, and that under no circumstances shall we be liable for any losses or damages you or anyone incurs as a result of any trading activity or investment that you or anyone engages in based on information or material that you receive through barchart.com and our services. So without further ado, I want to introduce my guest, Jim Van Meerten. Now, Jim is been in the business for about 50 years, and you can see from his professional profile, he's done everything from being an educator to being a lawyer, and I think that really kind of sends an essence about Jim that, you know, these disciplines he's learned from other skill sets through other professional has paid off in the long run for his professional career as far as stock trading and advising. And Jim, I believe, was working for Wells Fargo and has recently retired in the last few years, and Jim will address that. So without further ado, I want to welcome my guest. And Jim, how you doing?
Thank you. That was a very nice introduction.
So just briefly, right, you were a lawyer at one time, and
no, I started out, I've got degrees in accounting and law, and I passed the Georgia bar and the Georgia CPA, and also the certified internal auditor's exam. So I first started out as a CPA, then I became an attorney, and then later on got into the financial securities area. And because of my background, my last position before I retired was a compliance officer for Wells Fargo Securities, where I was in charge of compliance for all the annuity business that we had, which was approximately $5 billion a year of annuities that we sold.
Wow. So do you agree with me, Jim, that the skill sets or the disciplines that you learned, let's say being a lawyer, being an accountant, also helped once you started to go into the security industry, that those disciplines helped you become a better trader?
It did, because of course with my CPA background, I was looking at more fundamental analysis, but then later on when I took statistics and data analytics and a few courses like that, I started looking at the technical side, so it gave me a perspective of both sides of the fence.
Awesome. Well, I definitely agree with you on that. So Jim and I got an opportunity to spend some time together, and so here's a great picture of Jim and I down at this nice little cafe in Lake Norman, North Carolina, and I think we really had a nice time. Both our wives were there, and it was really fun getting to know Jim and learning and getting inside his head. So I wanted to really get into that. So let's do this, Jim. But do you remember that day, Jim, right?
Yeah, I remember the good catfish sandwiches.
The catfish sandwiches. I don't think that's what I had, but certainly the conversation and the drinks were nice as well, right? All right. So if you're not familiar with Jim or what he does for us at barchart.com, under the news section, you'll find something called the chart of the day. And here what happens is that Jim writes an article for us every day. And what he does is he looks through a lot of different lists or watch lists, and he has some scanners, and he writes an article about a very specific stock that what I would describe is that has a very strong momentum. In other words, a stock that has really kind of made a nice move over a certain period of time. But I don't want to put words in Jim's mouth, so I'll let Jim kind of describe his process in terms of this chart of the day.
Well, what I try to do is find stocks that have current strong momentum. And Barchart has a lot of watch lists, but the 4 that I like is, of course, the top 100 stocks, and that is those stocks with the highest weighted alpha. The next one I like is the new highs and low, and I like, instead of the 52-week high, I like the all-time high. So I go down there and I pick the all-time highs, and those are stocks you can see. Those are stocks that today, so far during the day, and during the day you'll see a few stocks added. Those are stocks that have hit an all-time high. The next one is further down on the list, which is the top 100 stocks to buy.
Top stocks, yes, all top stocks, right?
No, it's further on down.
It's in the investment segment, isn't it?
No, not yet. Go down to the trading signals. Go down to trading signals. On down the page.
Oh, here it is. Top stocks. Oh, right. Excuse me. I should know better.
Those are stocks that have the highest bar chart opinion using the 13 technical analysis charts that Barchart has. Then also under the investing tab, there's a very interesting, I call it a screen mainly, called a bullish moving average, which picks stocks that have all 3 of those attributes. There's stocks, the large cap stocks that have a high weighted alpha, they have a high bar chart opinion, and they also tells you how close they are to their 52-week percentage high. So it's kind of like taking those other 3 and putting them together and adding some more information. So I used basically those 4 screeners that Barchart has set up for you, watch list, and then each one I tell you why I picked that particular stock and how I used my custom view to select that stock out of the 100 or so that may be on each page.
So that's a great point. So let's just pick one of the ones. Let's just pick the top stock. And when you say your custom view, so what I did was, before the session started, is Jim kind of went through what are some of the criteria that he uses for his custom view, and I created a custom view. Now, for regular users, I think Gene will test this. I think you get 5 custom views, but for premium members, you get an unlimited amount of custom views. So I created a JVM chart of the day custom view. And Jim, you want to talk about some of the data points that you're looking at?
Basically, what I did was I wanted to have on one screen all the things that were important to me about a stock. So what's important to me, of course, is the current price and what's happening today. how many highs it's hit in the last month. That tells me how consistent is it recently. I like the trend spotter because it takes various proprietary things that Barchart uses and comes on with a current buy, sell, or hold. Then, of course, the next one is the Barchart opinion, which tells me what out of those 13 Barchart trading strategies, what each one is saying about them on a weighted basis. Then, of course, the weighted alpha. Now, the weighted alpha is really what is currently happening with the stock. In other words, it's a little different than the 52-week change because that's a raw number where the weighted alpha is a weighted 52-week change. Then, of course, 52-week percentage of the high. How close is it to hitting a brand new high? The 5-day change is, you'll see, is important when we go on to the stock momentum page. I want to see what it's done in the last 5 days, in the last month, in the last 3 months. And then, of course, the last one is for those longer term stocks that I have, that's sort of the golden cross. Or as the people say, when it's the golden cross when you want to buy, and it's the death cross when you want to sell.
When the 50-day moving average crosses over the 200-day moving.
200. And so those are the important technical analysis, and then I can put them all on one page. And depending on what I'm looking for instance, on this one, since I already know the weighted alpha is high, I want to sort for the Barchart opinion to tell me which ones are trading above their moving averages. So, John, just click on the top, where on the opinion button there, and it's just like an Excel spreadsheet. Now everything is done. In the inverse, John, click on it again, and it'll just show you that it'll do it in reverse order. And here's one that has a high weighted alpha, but currently isn't doing too hot because of the Barchart opinion. Then, John, click on the 52-week percentage of the high.
Did
50? No, the percentage of the high, not the change. There you go. And then it tells me those that are very, very close to the high. My next step then is, John, are you ready to hit the flip chart?
Yes.
Okay. So the next one tells me, okay, John, now John likes the candlestick, and I use the moving average, putting various moving averages on it.
So you like just a regular bar chart, so to speak, right?
No, the template I use, then it has the 20, 50, 100, 150, 200-day moving average on it.
So let me stop there, folks. So what Jim is talking about is in terms of his chart. And so, Jim, you don't really care if it's a bar chart or a candlestick chart, but what we're going to talk about in the second years, there are templates that we can put on top of our chart that have other studies a part of that process, correct?
Right. And as you can see, that this one was one that was the closest to, I guess you got a template over there, John, the third one down.
Well, no, I was just going to let folks know that one of the things that features we have on Barchart templates is that we've created a template based on some of the criteria that you use. And in the case of what you've been talking about, you're talking about momentum in terms of moving averages. And what this template is what Jim was saying, is a combination of 4 moving averages, the 20, 50, 100-day, and 200-day moving average. But also on top of that, we have our trend spotter, which is this kind of amalgamation of different technical studies. And again, this is kind of just another signal that you look at that just tells you, hey, I'm having positive momentum, or it's identifying, in this case, an uptrend, right, Jim?
Yes, and the reason I use so many moving averages is because I like to get the data smoothed out. So as you can see, especially if you look at the bottom, the 200-day moving average and the 100-day moving average, you can see that over the last 6 months, this stock has had a pretty consistent, although it's been up and down, it's consistently coming over the stream. So, I'd look at it and say, this is a stock that not only does it have a high weighted alpha, but it has current momentum. And that's what I'm looking at. what is the current momentum? I don't know how long that current momentum is going to last, but this has given me a good indication that it's lasted pretty well over the last 6 months.
And in the case of Cal-Maine Foods, is not only has it one of the criteria that you look for is that constant momentum, where all the moving averages are turning up, but in this case, it looks like it's made a 52-week high. Now, I can look at a larger data set. This could also be making an all-time high as well, right, Jim?
Yes, in fact, it does. If you go over and look at the little bar for today, it has hit an all-time high again today.
Right. So it over.
Excuse me, it was close to it, yeah.
52%.
So it's less than 1% from its new all-time high.
Right. Awesome. So let me ask you this then, Jim. So we're in the flip charts here. At this point now, you know that these are all positive candidates. They're all, what kind of at this point what makes that decision? As you're kind of like going through these charts, you're looking at these charts. Obviously those that where the moving averages are not all positive, or that the trend might have been slowing down. For instance, I think the one you were talking about was, I think it was the permanent basin ETF. I think it was, but just going through these.
Yeah, go back to the SWIR, the wireless, and this one also tells you some danger signs. Like I'd look at this and see that spike that went up. All of a sudden, I'd say, well, that spike can't continue. And sure enough, it gives me a signal there when it flattened out, says, oh, something's up with this company. They're either in a buyout situation or regulatory situation. Something's happened here. So a lot of times the charts will give you a signal that, hey, there's something I need to go over to the news thing and start looking up and find out what's the latest news releases on this one. Because although the raw numbers look very good on this stock, when you looked at the chart, all of a sudden it says, whoa, there's something wrong here.
So one of the things I use and kind of like in concert with what Jim's doing is I tend to be a little bit shorter term analysis, and I do like to look at MACDs and RSIs. So in the case of Sierra Wireless, we got an extended RSI, but then you get these kind of crazy, our MACDs and RSIs are turned over. That to me also is what Jim is saying is, yeah, this stock has good momentum, but something is amok, right, Jim?
Yeah. So the charts can give you a feel of what's happening with the stock and whether it's leveling out, it's dropping, so when I see something like that, because the raw data didn't signal this. The raw data didn't signal it, the chart did. Then that's when I want to say I'm going to do further analysis on this one and look at some of the news things, some of the transcripts and things like that to see if there's a reason I need to stay away from this stock.
So let's go back to the Cal-Maine. And again, what Jim is saying is, here's a stock that has good momentum. Not only has a good momentum, but it's also making new 52-week highs. Now, there are some folks who say, oh, this is very easy for us to recommend, or not recommend, but point out this stock once it's already made a new high. But Jim and I will tell you from years of experience is that you can't make new highs without taking out old highs, and that stocks that have positive momentum or in terms of relationship to the greater market tend to outperform for longer periods of time. But also on this chart here, you can see our RSIs and our MACDs. I'm using a daily level. They're not overbought. They're not overextended. And so this really is one of those stocks, I think, Jim, you would agree with me, it has good momentum in terms of our moving averages, but also some of that other technical data that we look at is not giving you a warning signs, and there still could be a lot of room to run on this particular stock.
Yeah, for me, a good RSI is between 60 and 75. If it's below 60, then it looks like it's plateauing or maybe getting ready to go down. If it's above 75, it's really, to me, moving so fast that I don't know if that's going to continue.
So I do want to move on, but I do want to point out another template that I created based on some of the information that that you gave me, and that is your risk assessment. In other words, what you kind of look at to give you those kind of warning signs, or maybe even if you were in this particular stock where you might be thinking about when the stock is telling you that you should be exiting this stock, or in terms of telling you that maybe the momentum has changed. So what I've done is I've put up another template that I created based on information to Jim. Now, folks, don't worry about it. In the link from our session today, I will have some templates, copies of those templates for you, so you'll know what those are. But Jim, again, we have what, your 50-day moving average, the trend spotter, and then something called the turtles channel. Do you want to talk about that for a moment?
Yeah, the turtle channel is kind of like, it's the top line. The red line is the highest point it's traded in the last 20 days. The bottom point is the lowest point it's traded in the last 40 days. So it sort of tells you, here's a resistance line and here's a support line. And if I've got them in between the two, and I see that that 50-day moving average is pretty well moving almost in the middle of the channel, that's a pretty good sign that we've got some momentum that is possibly going to continue. And so I definitely, if it would turning down and it's hitting new lows, and I'm getting these green lines bumping down, then, you know, hey, I'm going to get out of here, because this stock isn't for me.
So in terms of execution of risk management, you're not really that concerned about these momentary price corrections where we re-engage the 50-day moving average. You're more concerned about when the trend spotter maybe turns from green to red as price is what, bouncing off of these so-called support levels.
You know, just go back a few days, like right where you got your dot right then, you see the way the stock went down. Well, you could turn around and go over to the news channel and look at it and say, well, you know, I don't understand why it went down. There wasn't a single news release. There wasn't a single transcript call. There wasn't, you know, so volatility, a stock will bounce around based on no news at all. Just, you know, you don't know the reason why, and you don't want to get caught in that volatility. And that's why I like the turtle channel, because I want stocks that are going to hit new highs. As you can see, back a few months ago, it was going great guns, and then all of a sudden it channeled out, was flat. It wasn't hitting any more new highs, and then all of a sudden it started hitting new highs again. And at the same time, it was getting a confirmation of a support line across the bottom.
Right, you're talking about back over here.
Yes.
Yes.
So it showed me it wasn't coming down and testing any new lows.
So one of the other things that I got from a discussion from you is that, you know, I kind of get the sense that you're a little bit more of a momentum trader, and one of the tools that you told me that is what you called your best tool is a market momentum indicator. So we do have this market momentum page, that has a lot of really great data on it, and maybe we'll look at it, a couple things. We'll come back in here, but the one that you were kind of talking about to me was this market performance indicator.
Right. Now you know, the top of that page was great, but sometimes you can get too much data in your head, and you're like a deer in a headlight. So I like to go down to this one, and I like to picture this as a roller coaster with 6 cars in it. When we're starting out on the roller coaster, all the cars are level, they're equal, and it's at the 50-day, it's at 50. Then all of a sudden the market takes off, and the first one turns red and maybe goes to 55 or 60. The other ones are still level.
Let me stop you there. You mean green, turns green.
Turns
above
green.
50 would be green, below 50 will be red.
Right. And then all of a sudden the second car is going up, and the third car, the fourth car. When all 3 of these are green, I'm very confident we've got a very good market, and I'm not afraid to invest. When it gets to the very top of the market trend, then what happens is that first car turns red because it's going over the peak, but the others are still green. Then the second car turns red, the third car turns red, the fourth car turns red, until all the cars have hit that hump and they're all coming down and it's red. So this screen to me is that like that game we used to play in the playground, red light, green light. When this is green, I'm very confident that I can be in the market and not get hurt. If all this market is red, then if I'm going to be in this market, I'm thinking that I'm the smartest guy in the room.
So what Jim is kind of saying here is, like, if we look at what's going on today, all the stocks, all the different moving averages, and with this, what this is telling us, how many stocks are above or below the 5-day, 2, 20, 50, and so on all the way to 200. And that what Jim is kind of saying is he wants to see the green light go. In other words, see 50% above, 50% above, 50% above. That's kind of telling you not only do you have that individual stocks are having momentum, but the broader market is having momentum. What we're seeing today is that a lot of these moving average indicators are telling us that there's more stocks are actually below their moving averages, which is actually a bearish market indication. But I also think what Jim is also kind of pointing out to us, if we look at where we were yesterday in the short term, the 5-day moving average, is that we've actually are up almost 12%, which could be an indication that we're starting to see again some positive momentum. Is that fair to say?
If we look at those, analyze that 5-day moving average, we can see that 35, it's better than it was yesterday, it's better than it was last week, and it's actually better than it was a month ago. So we can see that the market is seeming to improve a little bit. It's not great, but it's better than it was a month ago.
Or at least it's not falling out of bed, right? It's kind of
right. It's, you know what? I'm getting a little bit more optimistic than I would have been last month.
So that really brings us to a great point. Is back on July 7th, you wrote an article about how you thought that the market had reached a near-term bottom and that there was kind of this positive momentum that was building into the market, and that you had a thought that we would see this momentum carry through. So one of the things we talked about before on our luncheon was that you kind of like to look at the 200-day moving average. And let me pull up a chart of that. And again, let me just kind of go to a fresh chart. And what we're seeing here is the number of stocks above their 200-day moving average. Now, what happened back in June was that, we got down to only 15%, which is a very, very bearish indication. It means only
leave your cursor
are still below their 200-day moving average, right, Jim?
Right, and leave that cursor where you had it, right there at the bottom. One more over. There you go. And you see that line that automatically Barchart draws across to you over at 1356. This is why I was saying that the market had come off its bottom. Do you see the way it's going up?
Yes,
and
from these days here.
Even today, it's not testing that new bottom. It's still up there. We're above that bottom, and so although the market isn't strong, I'm confident that we've hit the bottom, and the market will eventually go up from this point.
And here's Jim's, again, his momentum indicators, his moving averages, and I think we can learn something from here. Is what Jim is saying is the market made this bottom, but by July 7th, we didn't make any new bottoms, and a lot of these moving averages were starting to flatten out. And now what we're seeing is that the shorter term ones, that's kind of your roller coaster idea, they have started turning positive, and that our longer terms are kind of just flattening out. So the market is not making new lows and is still respecting those most recent lows, right, Jim?
Right.
So in this case, again, we can look at some other indicators. And again, one of the things that I like to look at is our MACDs and RSIs. And, you know, again, what Jim was kind of saying is, you know, here's where we made those June lows. You can see in terms of RSI, that's the lowest point, and our MACD had gotten, you know, overly extended. But in the recent weeks that had followed, even though we were kind of near the lows, we weren't making new lows, and our RSIs were actually starting to turn up, and so was our MACDs. This is called negative divergence, and this is actually a positive sign that momentum has shifted from the downside to the upside. So
now what's also interesting, John, is that if you had a different indicator up there, say you use the S&P 500 or the NASDAQ 100 or something else like that, or even Warren Buffett's fund, you'd see a very, very similar chart. They all bottomed out in that week.
So there's another chart that you're very familiar with that you like, is called the value line index as well, right?
Right, because the value line index is an unweighted, it's 1,700 stocks unweighted. Now, the one we were just looking at, as a matter of fact, was about 5,800 stocks unweighted. It was just how many went up and how many went down. And basically, that's the way this chart is too. The value line is the same way. How many went up, how many went down, and it's unweighted. So, you know, Apple and Exxon and Microsoft don't skew the results. And you can see we hit the bottom there, and it was coming out. And although we have had a slight coming down, we're nowhere near testing the bottom again.
And again, this blue line here represents the date of Jim's article. And again, that was the day where the value line, again, not only penetrated above the 20-day moving average, but it actually closed above there. So again, another positive momentum
we had
indication.
a pretty good run up there for the few weeks. We had a good run up.
Right, until then. All right, well, I think that is some really great information for our folks to look at. From this point on, though, Jim, let's talk about what we see in current market conditions and where you kind of think we're going to head, maybe, let's say, from now until the end of the year. I know we have this big Fed meeting tonight. Or after, after.
The Fed's got two things. Remember, there's short term and there's long term. So short term, if everybody hears the word raising the interest rates, they panic. The market tends to overreact in the short term. But if you think that raising the interest rate is going to control inflation, then what you've got in the back of your mind is that will mean commodity prices, raw materials, all that will come down, and the cost of goods sold as a percentage of a company's expenses will get smaller. That will mean more profits. So, you know, don't always look at the short. Sometimes you can be too short run. Headlines will make people panic. So
let me ask you, do you in your analysis, do you look at, or how do you separate the difference between, let's say, fundamental analysis, because you do have that background, and technical analysis?
Okay, in the long run, a company that increases revenue, increases earnings, and increases cash flow will go up in price. Companies that decrease in revenue, decrease in earnings, and decrease in cash flow will go down. In the short term, there's other factors that come in. So in my chart of the day, you'll notice that I do put in revenue projections. And the reason I put in a revenue projection is that it allows you to determine in your own mind, this current momentum, is it for fundamental reasons that will make that momentum continue for a long time, or is it only for technical market reasons because of headlines, because of a war in Ukraine or something else that's affecting it in the short run? So you can see that the technical analysis comes first, and then we get down to some fundamental factors, And with this particular stock that he's put on, I'm not sure which stock are we on, John?
This is your chart of the day for today.
For today. Okay, let's go down there and we'll look at it. You can see that the chart looks very good, very solid. And then I want to say, well, is this for a short-term reason or a long-term reason? So we can see that technically the stock's doing very good. It's a good-sized company. It's over almost $2 billion. And the revenue projections by the analyst are looking very nicely. And if you look, the analyst, there's only one analyst presently following this one, and he's got a price target of 25. And today we're trading at, what was that, John?
We're trading around $21.
$21. So I'd say, this is a stock that's got some upside potential. And of course, I know John likes to also look at the sector, and the shipping sector is looks very solid right now.
So that's a great point, Jim. Is like one of the things I kind of like to look for is not only relative strength, but I like to look for relative strength through, which sectors. And so, what I can do is, for instance, our top 100, I can screen by, our sectors, and not only our sectors, but I can really narrow it down to, the different groups or the industry groups, market sectors. And so let's add that and see where a lot of these top 100 stocks are trading and what sectors. And again, I'll sort by that. And you can see that your stock fell in the transportation sector. Now, do you worry about, for instance, like in the top 100 stocks here, we have a lot of stocks that are in the energy sector.
I try not to get too many stocks in the same sector. So I'm looking for a little bit of diversification. Now, I will admit that when I looked at my personal portfolio this morning, I'm personally a little heavy in the shipping industries.
Mm-hmm.
And we're looking at a very strong, I don't like to get too many of them, because when the sector rotation comes in, all of them will fall probably at the same time. It's very seldom is one of these not going to move with its sector.
So that's a great insight. So the question I would ask you is, and I'm kind of going to play devil's advocate, if you think the Fed is, raising rates to, try to curb inflation, in the short run, some of these transportation companies, for instance, the inflation from energy costs, but also this recessionary discussion that if the rates go too hard or the Fed steps on the brake too fast, that this could set a recessionary wave through the economy, and that, shipping companies' profits might actually fall because of that recessionary activity. Right?
Yes, I think you're correct about that portion, but at the same time, we're having a big supply chain problem. We've got goods in one place that need to be sold somewhere else. So I look at the supply chain improving, which means these stocks have room to improve. So the inflationary factor, I'm looking at the supply chain factor as being a little more weight on that than I am the inflationary factor.
So just to give our viewers a little idea, I do have a couple shipping stocks, not any that are on here, more that are more in the energy industry. So I'm kind of playing both sides of the fence, those shipping companies that tend to ship energy in those oils and natural gas. But I kind of want to I'm going to just bring this full circle before we stop to answer some questions. So we're talking about the Fed today, raising rates and this potential of, maybe inflation, changing inflation, but also this other side of the coin of creating a recessionary action. So this is one of the charts that you said that you look at. This is the conference board. And I think this is the leading economic indicators.
Right, and this this is changed every month. So as you can see, unfortunately, this one is through July of last month, and it won't hit till next Thursday. So next Thursday, that report will be done. But what I really want to point out is, you see when the red lines hit and we went into a recession. And this is the reason I personally use stop losses, because you can see when a recession happened, it happened quickly. All right. Sometimes before you even knew it hit you, it was there. So that's why I like stop losses, because you can see on each one of these how fast the market moved down when we were actually in a recession. And you can see right now we're at that point where we could cross over it at any point. So, that's what the market is looking at. And I think if you went back to that momentum chart, you'd see that recently we've been having some anxiety because we were approaching what the economists were saying is a recession. Now, the leading economic indicators, one of the things you have to realize is that the stock market is one of the components of the leading economic indicators. There's a lot more, production orders delivered, all kinds of things like that. But the stock market is one component of it. And that's why, as you can see, we were approaching a recession. The leading economic indicators were coming down and the stock market was coming down because it is one of the components. Not the only component, but it is one of the leading components.
That's one of those old adages, right? The stock market is not the economy, and the economy is not the stock market, right? Is that the
right? But there's a correlation. There's a correlation because we're owners. We are equity participants in this market. And so what it's looking at is when the economy gets bad, we don't want to commit our funds to being in equity. We don't want to own companies if we're going into a recession. If we're coming out of a recession, then that's when we do want to own companies. And so that's why it's important to watch both the stock market and the leading economic indicators, because if they're both coming up at the same time, I'm confident in the market and confident in the economy.
So I'm hearing you is that right now you're kind of saying to yourself, there's more information that tells you that you're not willing to put capital to work. But what about the capital that is already at work? You're going to just kind of stay as pat and wait to see if you get stopped out?
Right. The ones that I have, I'm waiting to see if I get stopped out. So I don't panic and sell. I let my stop losses take care of it.
You let your stop losses protect you, but you have to find a certain amount of risk that's going to allow you.
Each Friday I go in and I reevaluate all my stop losses.
Right. Is there ever a point where you'll say, you know what, I see, the tailwinds or the headwinds in the market, and you say, well, you know what, this stock is underperformed for a long period of time, but I haven't been stopped out. I mean, there's kind of a loss of opportunity costs if you're stuck into a stock that is not performing.
But then I go back to that chart that we were looking at before with the turtle channel. And if this stock has just been flat and adding nothing of value to my portfolio, I might well say, there's a lot of stocks that could add value to my portfolio, because as we saw, 35% of the stocks are now trading below. So, if 35 are, then that's 65%
are below the 55.
So I've got there's 35% of the market's doing fine. So
right.
I may want to get out of it because it's not adding anything to my portfolio.
So again, one of the things in terms of long-term, I will play market swings on a shorter-term basis, swing trader. I'm not afraid to go, play market from the short side either with options. But as far as a long-term investor, I agree with you. I'm kind of want to see, much stronger momentum. But is there still bull markets to be found? Yeah, there's still 25% of stocks that are above their 200-day moving averages. And in those 25%, there could be some stocks, for instance, our chart of the day type stocks that are not only doing well, but are outperforming not only the broader market, but also other sectors and peers in those groups, right?
For me, the name of the game is if I've got a portfolio where every one of my stocks is trading above its 20, 50, and 100-day moving average, I'm a very happy camper.
So one of the things I like about this page when we first came to it, and I said we'd come back to it, is again this kind of market momentum. And then you said that there's a lot of noise on the top of the page, but I think one of the things that you can look at in terms of these two charts here is what I kind of look at is I just look at this on a daily basis. I don't really care about the advancing volume and shares and that. What I just kind of want to look at is these two numbers here. Is how many are making new 52-week highs and new 52-week lows, and that usually tells me that when we're starting to see more lows than highs, that there's a greater momentum to the downside. And what I've noticed, even though in recent weeks price has pulled back, but we're not near those June lows, we're still making more 52-week lows and not many 52-week highs. So in terms of my analysis, I agree with you. I'm not putting any money into the market because I'm still seeing this greater breadth to the downside. Wow, Jim, that's been 45 minutes. That went pretty fast, didn't it?
It did.
Anything else you want to add? Because I do want to use this opportunity to answer some of the questions that have been put up by our viewers.
Right. No, like I said, I'm looking at, and my chart of the day looks at current momentum. What stocks are moving now? And if they've been moving for about the last 6 months, then there's a good. I'd like to own the stocks with the strongest momentum, not the weakest momentum, and hoping that they're on a rebound.
So that leads us to a great. John asks a question. He says, "What bar chart feature do you like yourself to identify large cap stocks that might be going up in the short term, and which features do you like for the long term?" You want to take that one, Jim?
Sure. I look at the stocks for me to trade are those that are in the Russell 3000. So I go to the page on stocks. Yeah, you can hit the Russell 3000 and that'll work.
Do you like the ETF or the Vanguard?
The ETF, the IWV, which I think is the page that you'll come up with on there. And then go ahead and put my custom view on there. Just click on the trading symbol and it should come up. Yeah, the interactive.
And
on my custom view.
Can you do that? I have to do that through a watch list, right?
I'll tell you another way to do it then, John. Hit the stock tab at the top.
Hold on. I think, John, go down to competitor or constituents. Yeah. There we go. And we cannot do the.
Oh no. Go hit stocks again. Yeah.
Stocks. Yeah.
Stocks. Okay. Come down to the index over here, Russell Index in the middle of the page. Then hit the Russell 3000 tab.
Gotcha. And then use the custom views over here.
Here's my view.
Your moving average one, right?
Yes.
Or your chart of the day one.
My chart of the day. The custom view that I had. Yeah. Okay. Now, if you want to find those stocks in here that are moving currently, there's two places you'd want to hit. One, you could do the new high. So let's trigger to see in the last month which stocks have had current momentum. Okay, you've got a nice list there of them. Now that's one way to do it. The other way is to go over to the 5-day change and hit that. Okay, those are stocks that in the last month, the first one we did in the last month, the second one we did in the last 5 days, these are stocks that have momentum. John, go ahead and hit the flip screen and let's just see what we got here.
Well, the couple that I love the narrative first of Humana, that is definitely in, the healthcare defensive type sector stock. That makes a lot of sense. But this is a kind of a
Now
crazy looking chart, right?
Yeah. So you can see all of a sudden we've had a lot of good current momentum right out of there. Yeah, if you want to do that stop risk, then we've got it. See, it hit some new lows, but all of a sudden now I'm hitting new highs. So if you wanted to identify a stock that's reversed itself, that's a good way to do it. By what's
Right.
happened in the last 5 days, the percentage change in the last 5 days.
In these last 5 days, even though it's down today, it's still up for the last week.
Yeah.
Yeah.
So
Excellent.
we're breaking through.
Another one I think would be interesting is Northrop Grumman, which is, a defense contractor, but again, more of a kind of a defensive stock, right? And I think if we go to your moving average one, this one is really going to tell a nice story, right? Nice little breakout today. I think all the defensive stocks had
Nice little breakout. At the same time, John, I would guess that the RSI on that is a little bit high.
Let's find out. Yeah, but not over, right? It's in that value where you kind of like to see good momentum.
But you can see it's getting a little bit pricey.
Right, but the momentum, nice
The
little
momentum's
crossover
there.
hero momentum, still could have some room to run on this one, right?
In any chart, on the other side, when we were looking at raw numbers, okay, that's kind of raw numbers is science. When we look at the charts, it's a little more art. In other words, I'm a spatial visual person, and so when I look at this, you got to interpret what's going on in there. And and so this is the art part of it.
Mm-hmm. That idea that technical analysis is really more art than science, right?
Yeah, well, when we look at charts, when we're looking at all
Yes.
those raw numbers, it's a little more science. And as we can see with that Sierra Wireless that we looked at a while back, the raw numbers were telling us it was a pretty good stock. But when we went over to the chart, we got a signal that said, whoops, something's happened with this that wasn't there in the raw numbers. So what happened to it? And makes you want to then, let's look at something additional information on it, press releases and that kind of stuff to see if it's a stock we'd like.
Right, and then you could also at that point do a little bit of your fundamental analysis too, right?
Right. Uh-huh.
Okay. There's a question here from Tony. It says, which sectors will continue to have downward stress? And he wrote example of housing. So let me answer that one. Tony, I think you have to think about the relationship of interest rates and the cost of credit to these companies. Now, as interest rates get stronger, that also makes for a stronger dollar. So I think any multinational that competes, on a global basis is going to have struggled. I think Jim, we were talking before, and was telling me that 40% of the revenue for the S&P is created outside of the U.S. Was that the statistic you gave me, Jim?
Yes, that was. I saw that on one of the news channels the other day. It was when they went in and analyzed the S&P 500 companies. 40% of their revenue came from offshore.
So I think any of those stocks are in those sectors. Now, from also a technical aspect, when you think about interest rates, high beta or high growth stocks that maybe not have, and this is that fundamental analysis, might not actually have earnings or not earnings, but positive cash flow. Those stocks, I think, will suffer in a rising interest rate environment.
Right.
Would you agree with me?
Now, I can remember back under Jimmy Carter that I actually moved because I needed a larger house. I had a baby on the way, and I can remember buying a 12% mortgage.
I remember those days, Jim. I mean, I wasn't as old as you, but yeah, I remember my first mortgage was like 16%.
People have to have a place to live. So it comes to a point, and what's interesting about the housing market is when somebody buys a house, what do they do next? They buy furniture, they buy appliances. People don't just buy houses, they buy houses and then they buy stuff to go in it. So always look at those consumer ones that are, another play on the housing is what about where stuff goes in it? Furniture, appliances, rugs.
Carpet, right?
Yeah, people need that.
I mean, here's a stock like
You
Home
buy an empty
Depot.
house, you got to fill it.
I think Home Depot is going to benefit either way. Either folks are going to stay in their homes and kind of fix their homes up, but even if those are moving into a new home, I know I just moved into a new home back in April, and yeah, I mean, it was a new home, but I was spending every weekend at Home Depot, you know.
You know, and you don't look at it as just being a retail stock. If you go to Home Depot or you go to Lowe's and watch it, there's just as much going out the door on the commercial side as there is on the retail side. So
Great
a lot
point.
of the small builders, you know, I'm not talking about Pulte and John Rowland and companies like that. I'm talking about the small local builders. When they buy their stuff, they go to the local Lowe's and you know, except for the trusses they may buy from a larger company, but they're buying a lot of their building materials right out of Lowe's in Home Depot.
Yeah, that's a great point. One of the things I always stress in some of my sessions is I'm really a firm believer is trade what you know. And one of the things that you can do is just observe the world around you. And just, you know, sometimes what I do is I go like in Costco, I just watch and see what people are putting in their shopping carts and the things that they're not putting in their shopping carts.
Years ago, I remember Peter Lynch saying that where he got his best ideas, he'd go to the mall. If somebody said about a new company, especially a retail company, he'd go to the mall and he'd sit outside that store to see how many people went in. But the important thing to him was not how many people went in that store, but how many people came out with a shopping bag.
I listen. This is what I love about you, Jim. Is, you know, in my world, I'm more of a short-term trader or a swing trader, but that is one of my favorite books. Peter Lynch's book, I think it's called "Beating the Street," and in his philosophy was, you know, trade what you know, trade those stocks that you believe, trade in those companies that you use in your everyday, you know, in your personal life, and that trust that the trends that you are experiencing are going to magnify, you know, across, you know, the larger magnitude of numbers of people, right, throughout all markets, right, or through the whole country. I see a lot of questions here about options and stuff, and I know Jim and I've talked about options, but Jim, you're not really that much of an options trader. You do occasionally trade options, but you're not really you're more of a buy and hold momentum trader. Is that good?
Really, the only time I trade options is I will buy some puts for downside protection, but I really would rather use a stop loss instead of a put because it doesn't cost me anything.
HP asked the questions: would stocks that were earlier rated 50 or more as sales and now come to hold to be a buy, is it fair to expect them to move towards a strong buy? I think what HP is talking about is in our opinion indicator.
Yeah, let's go to that.
For instance, here's a snapshot of the opinion indicator for Home Depot that last month it was a buy, but only 8% of the 13 indicators were actually giving a buy signal. Now we're seeing that more of the moving averages or indicators are all selling. So again,
what's going to happen is if that stock is going to get some support, the top part, see the short-term indicators, they're going to hit buys or holds quicker than the other longer-term ones are. So if you're looking for something that's coming off of a low, this is where you get your confirmation on this page here. Look at those short-term indicators. If they're starting to say buy, then you're getting some momentum there.
So that's a great segment. HP, next week, we are going to do a session on Barchart opinion and strength and direction indicators. So I would encourage you to stop by next week, and we're going to actually discuss this idea of this question that you were asking. So we'll go in a lot more detail for that. Well, Jim, listen, it's been an hour. We've answered a few questions. We didn't get all the questions in. But I just can't tell you how much I respect, and I'm honored that you spent time with us today. And I really do appreciate your articles, your charts of the day articles. It's kind of funny how a lot of times in my own personal trading, or when I'm looking for trading ideas to give examples in some of my webinars, that I'll find these stocks based on the information that you provide in that chart of the day. So I want to thank you for that. And again, Jim, thanks for coming aboard today.
Thank you. I really enjoyed it.
I know that folks is. Gene, do you want to add something here before we break?
No, just great session, both of you. And Jim, it's always great catching up with you. And really, our users, I think, are soaking up the information and the knowledge that the both of you have shared with everybody today. Really, Barchart appreciates it. So thank you both.
Thank you.
All right, Jim, until next time, well, thanks for coming, and we'll catch up real soon, all right?
All right. Thanks. Good talking to you.
So, folks, before we finish up today, I do want to point out that, as always, first of all, let's talk about our upcoming webinars. And HP, that's what I wanted to talk to you about, is we're going to do one on strength and direction. But those of us who are premier members, I want to remind you that we do have a new Friday session where we look at the market and market trends. And we try to make a sense of what's been going on over the week in terms of trading ideas and identifying trends. And then we mix it up with different segments, option segments, or a specific chart or something. So, come on and check that out if you're a premier member. Also, that all of our webinars will be archived on our YouTube channel. And if you are watching now on our YouTube channel, I would appreciate if you give us a like. Let us know that you appreciate or like the information that you are getting from us. Anything else, Gene? I think that really kind of sums it up, right?
That sums it up for today.
Well, we made it through without any notifications. That was a good sign.
Yeah, it was.
All right, folks. Until next time, stay safe out there, the best of health, and the good of all trading.